Alright, what is up boys and girls? Welcome back to another video on liquidity, supply and demand. Thank you very much for joining me again for another video. Please do drop a like and subscribe, really helps out the channel. Today we're going over my strategy which has been getting me an insane 80 to 90% win rate over the past 3 or 4 months. To be honest, it's absolutely changed my life and has been an incredible experience to be trading. Really high probability trades, and it has really changed my whole process of thinking about the markets. It's been absolutely amazing. Basically all based around the V-shaped recovery pattern. This is a strategy that has been patented, or rather led by a trader known as Dodgy. Definitely go check him out. Absolutely incredible trader. Learned loads from him over the past 6 to 12 months. And particularly, I've found that his V-shaped recovery strategy in the markets has been doing absolute bits for me in a bunch of markets, to be honest. This US 100 market and also on gold. I've been getting tons and tons of great trades. And I just wanted to go over a few basically on this video and show you why this strategy is so good. So basically, I'm just going to show you quickly what the strategy actually is. It's very simple, really. All you have to think about is you've got your market structure like this. Say you're going up and down and up and down, you're kind of going sideways. And then you're obviously, what you're looking for is your key swing points. You've got a swing point here. Obviously, this would probably count as a swing point as well. So say you're doing this, you're coming around, then you come down and you basically grab some liquidity on one side. Let me just turn auto off there. So you grab some liquidity on one side like this. This always tends to work really well for me, especially when we come down and then we get this bullish recovery. Bearish recoveries that happen like this do work as well. But generally, I've found that the bullish recoveries work the most high probability just because NASDAQ is permanently bullish, really, isn't it? Let's be honest. Much more chance of it reversing to the upside than the downside. As you can see then, basically this is what we're looking for. We come down, we grab liquidity, and then once we're coming back up like this, what we're looking for is we're looking for an inverted fair value gap. We all know what a fair value gap is. It's basically 3 candles here, a 3-candle pattern, and you're looking for this gap in the market where basically the wicks of the candles don't touch. The middle candle here looking very bare on its own. This is a fair value gap. You can look it up if you need a better definition of what it is. As you can see, we are basically looking like what we want to be having is this V-shaped recovery followed by that inverted fair value gap back to the upside. Once you get this sweep of liquidity here, this is what you're looking for. And then basically what I do is I enter once we close back above that inverted fair value gap. For some reason, my trading tool is really small. I would have my entry, and then obviously my stop loss will be below the inverted fair value gap. Manual stop loss in case we do get some wicks down here. If we close back below this, I would close the trade, and then we would have targeting a 1-for-1, and then I'll have runners that would target the internal swing high, and then I would probably just target the high of day as well. Really good strategy, really simple, and I've been having tons and tons of success with this. There is a bit more nuance to it than this, but overall this is the basic strategy of it, and I'm just going to show you a few examples from recently that I've been seeing. So we'll just take a quick look at the chart. So this is gold. I did gold in the last video, so I'm going to do US 100. We've actually got 2 trades on US 100 that happened on Friday. Both of them were absolute bangers, to be fair, and both of them worked out to absolute perfection. So basically, let's take a look at what I was looking for. So as we can see, let's just go back to here. You can see, pretty obvious, we were going sideways. We've got this big move to the upside. I'm thinking, okay, if we come back down and sweep down below this very obvious key level here, we could be looking at having a nice V-shaped recovery in the market. So let me just go back on replay mode so you can see what I'm looking for. So I'm sitting, I'm chilling in the markets. I'm thinking, okay, we've got all this liquidity down here that's probably going to get swept. We're going forward. I'm saying, okay, liquidity here is getting swept. Let's see if we get any inverted fair value gaps. I'm looking at the markets here. I'm thinking, okay, we've got some fair value gaps, but none of them are getting inverted so far. You can see we actually did have one here. After we got the sweep, we did get this, but we never got that V-shaped recovery. You can see it's not really looking very textbook V-shape. We're kind of chopping to the side, and then we come down, we make a new lower low. So as you can see, we're looking like we still need to go a bit lower in the markets. And then I'm just looking here and watching and waiting, and then bang, we've got this big, massive green candle coming out of nowhere down here. If you look at this, this is looking much more textbook. You can see how much we basically just came down again, got that manipulation leg. You can see we've got the sweep here, and then the manipulation leg, then that big momentum back to the upside, this big candle here. This is like a really big candle in terms of the size. Reversing back around, the last time that we got a candle this big that was green was all the way back here when we were bullish. So then I'm thinking, okay, if we get a close above this, I'll probably take this. I'm waiting and I'm waiting. And then we get the close above here, as you can see, and I took the trade. My stop loss is below the low. I'm looking to basically target somewhere around, let's have a look here. Why can't I see my, there we go. For some reason, when this is there, I couldn't actually see what the thing was. Anyway, I would have entered here on this close above, stop loss below, aiming for a 1-to-1 as my first take profit. Let's just see what happens next. We come up, we hit the take profit for a 1-to-1 pretty much instantaneously. Beautiful trade. This obviously needed a bit of a retracement as well, considering, look how lovely this V shape is. This is what you're looking for. Really, really textbook V shape in the market. Not looking for anything too crazy. You can see if you zoom out on this, you can see if you came away from your screen really far, absolutely beautiful V shape. This is on the 1 minute as well, so this all happened really quickly. So we're coming back in. We obviously go 1-for-1. That's my target for my first take profit. I take half my position off at 1-for-1. I set the rest of my trade to break even after this. And then I'm targeting some of these internal points of liquidity as my final take profits. On this one, I was thinking we're probably not going to run all the way back up to high of day because we've dropped so much and expanded to the downside so much. So these were my take profits that I would have been looking for. So I've already took half my position off and this is at break even. So I've already won and I'm basically just waiting to see what happens next. We go sideways for a bit. We come up, we hit the second take profit. So I take another half off. So I've took 3/4 of my position already at around a 1.5 to 1 RR at that point, I would say. And then just seeing what happens next. Let's just see. So we're going sideways. Once we started seeing this, I would have probably just closed the rest of the position, to be honest. We didn't quite get stopped at break even, as you can see. But once we saw this and we were starting to chop around sideways, I probably would have just closed the rest of the position. Overall, for around probably a 2R, I would say. Let's just see what happened next. So as you can see, we were going sideways for a good while. So really, after we were going sideways for such a long time, and we came down multiple times back into this area, I probably would have just closed the rest. So this would have been a good trade here. Probably would have got about a 2-to-1 RR on this trade overall. As you can see, really, really nice. And then later on in the day, I'm thinking, okay, maybe we come down, we get another sweep of liquidity. We're going sideways for a while here, and I'm thinking, we've got this massive gap here, the previous day opening gap here that we're probably going to get drawn back towards because this is a massive inefficiency in the market that needs to get closed up. And then I'm thinking, okay, we've got this nice push to the downside. We're probably going to come down, sweep this liquidity, maybe go lower and get another trade. So I'm already ready here on the charts. So I'm checking this. I'm thinking, okay, nice momentum to the downside. We've got a pretty obvious swing point here that we can take liquidity from. So I'm watching and I'm waiting. I'm looking, okay, we've got a nice sweep of liquidity below. We've got this already starting to form the first part of this nice V shape here. We've got good targets back to the upside if we do start to come back up here. So I'm watching and I'm waiting. I'm thinking, okay, look, beautiful, beautiful, beautiful candles back to the upside, guys. Look at these candles. We come down, we're really stalling. We're just grabbing the liquidity here and then bang, two big green candles to the upside looking really, really good. So I've got a nice fair value gap here that we've closed above. I enter the trade. My stop loss is below. And then I'm just waiting to see what happens next. Let's just see where my 1-for-1 got hit in the next minute on this trade, which was pretty incredible, to be honest. If I'm being completely honest, I actually didn't go break even on this trade. I remember taking it because it all happened so fast. I basically entered this. I think I went to the toilet or I went to get some food and I came back. So I would have, what should have happened here and what I should have done was I should have got a 1-for-1 here and then gone break even. And then as you can see, I would have got stopped out on the rest of the position. But I didn't actually do that because I went to eat some food. So basically what happened was I came back and I was like, oh shit, we did hit the 1-for-1. The take profit hit, but I never went break even because I'd have to set the break even after the take profit. So basically I was still in this position, even though I shouldn't have been. As you can see, I've got some pretty clear targets for this back to the upside. The V shape is forming pretty nicely here. We've got some pretty obvious targets that I can go for. We've got this liquidity point here. And then we could target all the way back up to this wick up here if we wanted to. And then I'm just going to see how the trade plays out. I've already got half my position taken off and I'm at break even. So we're watching, we're waiting. We come up, we hit the second take profit there. Lovely, lovely trade. That's actually a 1-to-3 in terms of risk to reward. So I would have took 1 for 1 off at the first point, and then I would have took another 3 to 1 on the second half of the position. So I'll be up around 2R, I think, at this point. And then I'm just break even on the rest. Are we going to go and hit the final take profit up here? It looks like we got really close, and then we're coming back down. We're coming back down. Oh, and then we finally got hit. I don't know if this would have, depending on your fill, you may have got stopped at break even here. I may have closed this early. When we got so close to this high here, I may have just trailed my stop loss up, so I would have got stopped out here on the final bit, somewhere in this area. But as you can see, this would have been a successful trade as well eventually if you just held the final runner. That came up, took that liquidity up there, and then obviously the markets closed pretty shortly after that. But you can see 2 banger trades on Friday there, pretty obvious stuff. Just looking for that liquidity sweep and then that inverted fair value gap back to the upside. Targeting that 1 for 1, keeping it pretty conservative, and then leaving runners for the rest. Really, really good stuff. And then it happened again later on in the day. Two pretty textbook V shapes. You can see, if you zoom out on your chart here, let me just remove all the drawings. Look at these. You can see how obvious these are. You can see these. If you went and stood on the other side of the room and looked at these, you can see how easy they are to spot. There's plenty of these happening in the market all the time, guys. Anyway, that is the strategy that I've been trading. It's been doing absolute bits for me. Please do like and subscribe, leave a comment. Shout out to Dodgy again for showing me the potential for this strategy. I've tweaked it a little bit for myself. Overall, this liquidity sweep plus the V-shape backup, absolutely incredible. Please do drop a comment, let me know your thoughts, and I'll catch you in the next video. Cheers.